Explore exactly what it takes to become a successful day trader and the power of consistency from the minds of the trading's elite. This is the Beyond the PDT podcast. Here are your hosts, Bryce, Tuohey, and Matthew Monaco.
What is going on, guys? My name is Bryce, Tuohey. I'm here with my good friend, Matt Monaco.
How's it going, everyone?
We are here today with Beyond the PDT. For those of you who don't know, probably many of you don't because this is our first episode, we are going to be talking about things related to day trading, swing trading, different kinds of investments, really, interviewing different up-and-coming traders specifically to kind of give you guys insight as to how people are finally starting to make it to a point where they're becoming consistent and successful.
Exactly. So Beyond the PDT, as the name implies, we're trying to look for people and ourselves to get beyond the PDT. That rule, instituted by the U.S. government, is a huge hindrance on a lot of people in their trading. So we're looking to just focus on those people who have made it past the PDT and hopefully give you guys some tips on how maybe you can get past the PDT and maybe some trading strategies along the way.
And so I think one thing that I think Matt and I both hope that we can get out of this to make it a little bit more unique than some of the other interviews and podcasts is that we hope to interview people who you might not completely know, people who are just kind of starting to make it there as opposed to the people who are, multi-millionaires from doing this, the names that you've heard of. And obviously we'd love to get those kinds of people on the show, but we would also really like to focus on these smaller people so that you can kind of, I think it's important. I think, speaking for both of us, it's important to, from people who are kind of easier to relate to in terms of where they're coming from. People who are closer to those who are just either starting to begin or are starting to find some consistency, but they have to go a little farther.
Exactly, because there's a ton of podcasts out there and even YouTube videos that highlight all these extremely successful people, and that's great for them, but the average Joe isn't, out there making $1 million a year in their first year. So we're looking for just the people who are grinding every day, looking to, make that couple $100 to grow their account slow and steadily and eventually just make it over the PDT.
Yeah, exactly.
All right. So, we're just going to start out with what is the PDT, because it's important to define that for a lot of you guys, especially if you're not terribly familiar with day trading or if you just, you're just trying to get into it.
And for those of you who are just starting to get into it, the PDT sucks.
We'll come back to that later. But so the PDT is an acronym. It stands for the Pattern Day Trader Rule. It was instituted by the U.S. government back in the early 2000s following the dot-com bubble to protect citizens from technically themselves. Basically, the rule is if you have less than $25,000 in a U.S. brokerage account, you can only take 3 day trades per rolling 5-day period. So as you can see, that has a huge hindrance on you if you're trying to grow your account because technically you're only allowed to trade 3 times per week.
And so, I know that, I think, in all honesty, I think it does have, a good intent. It keeps, the idea is kind of to keep you from over-trading, from making too many stupid trades or blah, blah, blah. The problem is, though, there's so many, I wouldn't say so many ways around it, but you can go with an offshore broker that you're going to pay higher commissions at normally, but you can get around it, and it really kind of, going around that rule, it makes it way more difficult, way more likely to, you're not going to go into this with the average, again, we're speaking from the average Joe, you're not going to go into day trading with $20,000 right off the bat. You're probably going with a smaller account. And when you go with some of these offshore brokers, you're able to use leverage and because, again, to try to grow your account faster. And it all stems from not being able to just trade every day because of the PDT.
Yeah. I agree with that. They had probably good intentions when this was going on. The dot-com bubble, when it burst, a lot of people lost a lot of money. So they were just trying to protect people from themselves. But since then, I think it's just gone completely haywire. It's not helpful anymore.
And I think, speaking from personal experience, I understand the point of the PDT because I am victim of overtrading like you wouldn't imagine. But at the same time, it also, I don't know, I was one of those people who was encouraged to go to an offshore broker because I wanted to, not necessarily, it wasn't because of the leverage or getting to, buying power really. It was because I just wanted to have the ability to trade more frequently. And because of that, it just caused me to overtrade so much.
Yeah. I can definitely relate to that. So pretty much every broker, big broker in the U.S., I have actually broken the PDT rule with. This guy. Yeah, E-Trade, TD, Charles Schwab, Fidelity even. I've pretty much broken the PDT rule with all of them. The first time with your broker, it's actually not terrible. It's not a super big deal because you get one freebie and they can reset it for you. But then when you break it a second time with that broker, that's when it becomes an issue because then they really tighten down and just limit your trading ability. They make you go all cash, which sucks, especially when you're trading stocks because then you have to wait for that cash to settle. And again, when you have a small account, that's a big hindrance because then you just can't take those trades when they're there. And it's really frustrating at times.
Yeah, and I think Matt just kind of brought up a good point. I don't even know if he meant to do it, but I mean, I think the majority of our podcasts are going to be related to stock trading as opposed to options trading because the PDT really kind of hinders those trading stocks more than does options because I guess that with a cash account, it's a lot easier to trade options because every day it resets as opposed to trading stocks is 3 days. So
yeah, no, that's true. Actually, in 2017 though, they changed it to 2 days. So like if you trade on Monday,
right.
Tuesday you don't have those funds, and then
Wednesday,
you get them back Wednesday. Yeah. So it is only 2 days now, which is better than the 3 days it was for the last like 15 years. But still, if you're just trading U.S. equities, it sucks when you don't have the money.
Absolutely.
So as you mentioned earlier, there's multiple ways you can get around the PDT. You mentioned the offshore broker, which, I mean, I've gone that route. You've gone that route. Yeah. And I mean, it gives you a ton of freedom, but those things are really sketchy.
Yeah, no, so I would completely agree. Extremely sketchy is a good word. Not necessarily for the fact because, like, although I would say there's a risk in terms of, like, you don't know. You're not protected by the SEC at that point anymore, or the United States SEC. And it's like, you don't know if you're going to get your money out of there sometimes because all they have to do is like file for bankruptcy or something. Company's gone. Your money's gone.
Completely agree. I mean, there's some decent reputable ones out there, but even those, I wouldn't really recommend going there just because when you have that small account, they give you usually 6-to-1 intraday leverage.
Yes, they do.
Which is way too much leverage to have because then you want to use all your buying power and you can blow those accounts super fast. The commissions are also super high and they will eat almost all your profits up. And then, like you said, you never truly know if you're going to get your money back, which is a scary thing. So
yeah, for sure. And I mean, the leverage is sometimes even more attractive than the fact that you can trade whenever you want because it's like, not only can I take, it's hard, like, let's be real. It's hard to grow a $2,500 account regardless of whether or not you're under the PDT or not. I mean, it's just, if you're trading, and it depends on your style of trading, which is stuff we'll get into later, I'm sure, and things we'll kind of touch over with different people we interview. But it's hard to grow a small account without using. I should say it seems hard to grow a small account, and so that leverage is like, oh, sweet, I can take my $2,500 and turn it into what is it, $12,000,
$15,000. Which I mean, again, when you're a new trader trading with a 2,500 account, you said that's just way too big, and I mean, I'd be lying if I said I haven't done that before.
Yeah, for sure.
With these offshore brokers, again, it's just extremely tempting to just use that full margin, but then you lose like 3% on a trade, and you're all in. Like that $15,000. I mean, that's half your account gone, basically.
And it's a tiny loss turns into an astronomical, what should be a tiny loss.
Exactly.
Turns into I won't lie, my last offshore broker experience did not go so hot. So, I mean, again, if you really do know what you're doing, then by all means, and even if you don't, I mean, it's like, it's all part of the learning process.
It is a good learning experience. It is risky, and there are some people out there, you see them on Twitter and stuff. But again, they're experienced traders. They've been doing this for a while, and they can turn those small accounts. Sometimes they have chat rooms, back them up, but we're not gonna get too far into that. And they can grow these accounts, and it's a little misleading. It can lead the new traders on, even us on, that like they're growing these accounts in like a 2-3 month period to like $50,000, $100,000, and sometimes it can be really discouraging because these people are just making a ton of money and you feel like you're just spinning your wheels or even moving backwards, and it sucks.
But I also think it's important to note regarding that topic that they are, mostly, you can't speak for everyone here, but a lot of them are legitimately doing that. Like, they're not faking those numbers. Some of the more reputable ones. I should say some of the more reputable ones.
Yeah. I would agree there. But like most people, you know, are just making a couple $100 a day. Sometimes they're making $50 a day. And when you're trading with that small account, like those are realistic expectations.
Yeah, and sometimes you're going to lose $200 a day. More often than not.
Especially
when you're new. Don't get discouraged from taking those losses.
Yeah, and as tough as it is to hear, like if you come in expecting to just make money right away, it's just not how it works.
Don't even trade if you come and expect to make money right off the bat.
Yeah. Completely agree. So besides offshore brokers, you do have some other options to get around the PDT. This one is a pretty popular one. So if you have like, say you're trading with like a $5,000 account or $6,000 account, you can then, you know, split that money up between multiple brokers because technically the PDT only applies to your one broker. So if you have like 3 brokers, instead of having 3 day trades, you actually have 9 day trades because you have 3 day trades with each broker. So yeah, you're splitting your account up. You might only have like 2,000 in each or something, but that way it gives you the ability to trade more frequently, and you can get in on the opportunities that you want to get on instead of sitting by the sidelines or breaking the PDT.
Yeah, absolutely. I actually personally have never done that, but I know it's an option that I was very close to doing, and I don't know if you're done with that point. I think another option quickly was what I did is I took basically the money that I would have broken up into three different accounts and I put it all into a cash account. Mm-hmm. And it was a way to allow me to take as many trades as I wanted using, I should say not smaller size, but you know.
Yeah, you had to budget.
I had to budget my trades, and I wasn't looking to really make money on it. It was for me a way to kind of test the strategies I was using without losing a lot of money, but still having the ability to make more than 3 day trades a week.
Yeah. So when I first started, I actually did go this route because at that time I didn't even really know about these offshore brokers. So yeah, I put $2,000 in like 3 different accounts, so that way I could have multiple day trades. And I mean, it worked out pretty good. Eventually, you know, life happens and I just took the money out, but now I've gone the route that you've gone. I've consolidated all my money into one account. And that way it's all cash, but I just have to budget the trades. So that way, you know, I can't use all my buying power on one day because then I know I can't trade the next day. But this way, you know, I can day trade. I can technically take 10 day trades in one day with a cash account without breaking the PDT because the PDT only applies to the margin.
And I think the one thing that really kind of appeals to me about staying with one broker is I'm a big fan of like understanding the platform I'm using. And
that's a good point.
Yeah, like sure you can definitely understand all 3 different platforms, but I really like being able to use one and just kind of I wouldn't say your platform doesn't make you a better trader, but it definitely understanding how to use one.
Yeah,
and
I mean it decreases the stress.
Yeah, absolutely.
And if you're more familiar with it, you can add hotkeys, you can make your own scanner, and I would say it does make you a better trader if you're just aware of the technology that you're using.
Absolutely, yep. Yeah, well, but before there is technically one last option. It's to save $25,000 before you start trading. But again, I don't know about you guys, but I don't have $25,000 just sitting around.
No, I don't either. You know, if you could go with multiple brokers, I feel like that's the best route. But I would say that's probably the best route if you only have like $4,000, $6,000 somewhere in there. If you have any more than that, I actually think it's better to just consolidate it into a cash account. Learn to just budget the money that you have so that way every other day you use like half your trading power. You know, if the trades are even there, you don't have to do that. Because then that way you can I feel like you can grow your account more. You can take some bigger position sizes using, some good risk. You're not limited to only taking $2,000 positions and forcing yourself into these really small stocks if you want to trade, a little more expensive ones. And that way you can still get a good share size so that way you can make a meaningful gain.
Absolutely. Yep. I would completely agree with that.
Yeah. So, I mean, throughout the whole podcast so far, I think it's been pretty clear. I do not like the PDT. I feel like it hinders me. I feel personally like some personal experiences. My most recent time, I broke the PDT.
Like a week ago, by the way.
It was about a week ago. And then from then, that's when I turned my account into cash because at that point, I pretty much used every broker that I wanted to use and there was nowhere for me to go. So I was like, I'm just going to force myself to use the cash account to limit my trading because, I'm a classic overtrader. When you get the bug, you're addicted to the game. Like
I would agree with that, man, for sure.
You don't want to stop. Sure. It's tough, but you gotta limit yourself. And go ahead.
No, and that's the one thing though too. Also, is that like a ton of people will be like, "Don't catch FOMO, don't overtrade." And yeah, that's like everyone says that.
Yeah.
Like no crap, but it's like catching FOMO and making trades you shouldn't take and breaking the PDT and stuff like that. It does help you. You have to do that stuff at some point.
Exactly. I mean, going back to my story though, like, so I was in the trades. I knew I already took my 3-day trades for the week. On my broker, it literally comes up bright yellow and red. And it's like, if you take one more day trade, you break the PDT rule. But I saw a trade that I liked and I was like, okay, like it's worth the risk. I knew my risk level. I was like, all right, I'm going to risk like $100 on this. I was like, I'm going to swing it overnight so that way I don't break PDT, because overnight trades do not count as day trades because you don't sell them the same day. And so I got in the trade. I thought it was great. You know, I'm in it for like an hour. So at this point I'm at work, right? So I'm looking on my phone.
Which, this guy trading at work.
You know, you got to do what you got to do to get the trades in. But so I see it, and you know, it goes to my risk level, and mentally, you know, you should take that loss. Like, but for me, I was gonna break the PDT, which is tough. I wanted to be in the trade. I felt like it was a good trade. It wasn't over trading. I thought about it for a while, but it goes to my loss, and now so my $100 loss, and then it keeps going down. Now, next thing I know, I'm like down $200 or something. And at that point, I was like, you know, screw this shit.
This is not PG.
Yeah, screw this shit, and I, you know, cut the loss anyways, broke the PDT again, and it actually was good because by the end of the day, I probably would have been down like $300-400, and that's what part of the reason also why I went to a cash account, so that way I can actually use proper risk reward. If I'm going to risk $100 to, you know, make $200-300, I want to be able to cut that loss off at $100, so then that way, you know, my profits are, you know, I'm not being like, take 3 good trades, make money, and then I have 1 big loss simply because I didn't want to break the PDT rule. And for me, so far, you know, it's been like 10 days. It's been probably 2 weeks. But so far, that's been really good for me with the cash account. I can lock in the gains even too, because countless times since I've started trading, you know, I've been up, you know, $200, $300, $400, and you know, I don't want to sell because when I sell, you know, it's a day trade. Even if I want to break the PDT, I don't want to waste the day trade. As dumb as that sounds, it's a total mental thing. And then, you know, that $400, then next thing I know, it's $100 loss. And I mean, that's a huge confidence killer, and it sucks.
Absolutely. It's the worst. It really, that stuff sucks. And like, that's why the PDT, that's why we're so against it. And when you do start with a smaller account, like we both have, and once you finally start getting to the point where you're getting consistent enough to get close to breaking over that, it's a big milestone because it stops you, or allows you to not face these problems anymore. So that's kind of
absolutely agree.
Why we're talking
and again,
about this stuff.
If you're, you know, this is your first time getting into this, or you're just new to trading in general, the PDT is probably good for you, and it's probably good to not break the PDT because, you know, it gives you time to learn. You're not going to take some dumb trade in some really small stock and, you know, just, you know, make 1 million trades a day on it and just lose all your money away. So in the beginning, at first, when I first got started, I was a fan of the PDT.
Well, I think we should probably, we haven't even talked about this. We should have said this earlier. We should kind of give them we haven't even told how long we've been trading for.
Okay.
So yeah, tell them how long ago you started so they kind of have an understanding for people who might be brand new to this, you know?
Sure. Yeah. So senior year of high school, maybe freshman year of college. So this is like 2016 time. So 2 years ago, almost 3 years ago now. It's pretty scary.
Yeah.
That is when I started trading. And at that time, you know, I just had my high school job, you know, so I didn't have a ton of money. I managed to scrap together like $2,000 to throw into an E-Trade account or whatever. And at that time, the PDT rule was kind of good because, you know, when you're new, again, you do want to trade every time. You think it's like a casino, a slot machine or whatever. You just want to push that button all the time. And the PDT rule is there to stop you and protect you from yourself when you're first getting started. But then I would argue, you know, over time, as you get better and become a good trader, or at least what you think is a good trader.
Yeah.
I mean, definitely better than you were when you started. The PDT becomes a huge hindrance because at that point, you should be able to protect yourself from yourself. You should have that discipline. You should have developed it after those 3 years. And I mean, I'm still working on it, don't get me wrong, but definitely way better than I was. And so when I see a trade I want to take, you know, I want to have the freedom to take it. And then if it's a loss, I want to have the freedom to cut that loss. I don't want that loss to compound, or if it hits my price target and I want to get out for profit, I want the freedom to cut or to take that profit and just move on. And so currently right now, I'm still below PDT. growing my account, the cash account that I'm now using. And yeah, so I mean, technically I'm free from the PDT. I just have to be careful with the trades that I'm using because of my cash account. And sometimes I can't trade if like it's a really active day. I'll use all my cash that day, and then the next day I just have to sit there and watch, which still sucks. And wouldn't be a problem if I was above the PDT and I could have a normal margin account and normally just trade. But I mean, that's where I am. What about you?
So Matt's been trading for longer than me. I actually kind of I wouldn't necessarily say discovered day trading, but when I was in high school, it kind of was something I heard about, didn't really understand it. I met Matt at college my sophomore year, so that was about a year and a half ago. Mm-hmm. And that's when I first kind of really saw the potential that day trading had. More for the financial freedom, I just was really interested. Yeah.
That's the dream.
Yeah, that's seriously is. And I started studying from stuff that Matt had given me, or from free content on the internet, and just watching charts. And I was paper trading for the first few months, and I started actually putting money into it about a little over a year ago, because I realistically probably started getting into this like a year and 8 months ago. So probably between a year and a half and a year ago is when I started putting real money in, and unsurprisingly, lost it.
And, but that's a pretty common story, and I think a lot of the people that we're going to have on, at least I expect, a lot of them are going to struggle in the beginning. They're going to blow up accounts. I mean, I see, first of all, on Twitter, that's a ton of financial information if you're following the right people, but a lot of them are starting to come out and finally be like, it took me, multiple blown up accounts. It took me multiple years to actually get this. And yeah, there's some people out there, again, that just get it immediately, don't blow up an account and, become millionaires through day trading. But that's just not the average Joe. That's not the average trader. And you don't even need to make $1 million to have a good life and be financially free as a day trader.
Not at all. No, not at all. I mean, it's, again, what we think, we hope that that's going to be the common story, because that, from what we understand and from people we've talked to, that is the common story. And it's just about keeping the grind going, persevering through those losses, because it's when you take those, I never really necessarily blew an account because I did have a decent amount of money saved, and
I can safely say I have.
Yeah. No, and I had a decent amount of money saved, and I would put a large amount of it into, like an E-Trade account. And when I lost $2,000 on that account, which for, when people go into an offshore account or an offshore brokerage or whatever, and that's probably what they're going to put in there is $2,000 to $3,000. That would have been my blown account. But when I lost enough money, I was like, all right, I'm going to sit back, study a little bit more, track some more data, not trade with real money for now. Or what I'd do is trade with really small size, where basically I was breaking even off commissions if I made money, and losing $5 or $10 if I missed, or if I
which is a good learning experience too. And I mean, I never went that route. I'm kind of balls deep guy, man. I'm gonna go all in.
Hell yeah.
But when you're first starting, though, if you limit the amount of money you're putting in a trade, right? So that way, at most you might lose commission, or if you break even, because you took a $10 gain, the confidence, the actually getting in the trade and stuff, the real time action, because you can sit there and in hindsight look at a chart and be like, oh, this was easy money. But in the moment, it's not easy money, and that's what a lot of people don't get, though. And that's why a lot of people think day trading is easy, is because they'll go back and look at a chart and be like, oh, obviously I would have bought this here. It's not really how it works, and it's really frustrating because you see your friends, your family, or people because you like day trading, you're going to talk about it with someone. I mean, and they're like, then why aren't you making money? It's that simple. Trading is simple. It's just not easy. And in the moment, those trades are not that obvious. But looking back on them, and it's good to look back and review, it's just not that easy. And you're not like, this was a guaranteed gain.
Well, and one problem that I had for sure was that you see, okay, you're looking at the charts, right? Whatever minute time frame you're looking at, if it's a minute chart, 3, 5, and you see the candle, you see a green candle, a big green candle, right? For me, because I'm primarily a long bias trader.
Yeah, same here.
So you see this big long green candle, and it's like, oh, perfect. I could have made money anywhere in here, except that move really happened in like 10 seconds out of that minute, or it happened. It was chopping around for 50 seconds, and all of a sudden it shot up, or it went up. Let's say it went up. It was a $3 stock that went up to $4 in the course of like 5 minutes. and you're looking at a 5-minute candle, it went up to like, 350 and back down to 3. So if you bought it at 350 and then all of a sudden it came back down and then ripped back up, you could. It never occurred to me that you could lose a lot of money on those kinds of candles. You know what I mean?
Completely agree. And again, I imagine if you have a small account, you're going to be trading these small stocks, and they're high risk but high reward.
Yeah, that was talking about like kind of a penny stock.
Exactly, and I mean, I imagine you can trade your blue chips, your Apple, Disney with a small account, but what are you going to buy? Like 2 shares? Amazon. What are you going to buy? 1 share of Amazon? Like it's tough to make gains when you're day trading like that. So you're probably trading these small accounts, and if you're using an offshore broker, as we talked about, your money can be gone instantly. Yeah, you can double your account instantly, but is it really worth the risk of just being out of the game? You got to trade defensively. You got to, the goal is to stay in the game as long as possible, because eventually you're going to get it. You're going to understand trading. You're going to know your setups, and you're going to start making some good money. But if you blow your account too quickly, you're going to fail. And you're going to be part of the, 95% of traders that fail. And honestly, I think that's why so many of them fail. They're just not in the game long enough.
Preserve your capital. That's
exactly.
If you're going to lose, if you can minimize those losses, and
correct.
And you know what? Matt and I do this. We have a job, and when we use that money to help fund our trading even after we've lost.
Absolutely.
And so obviously we would love to just sustain ourselves from trading and not have to worry about that. But
completely agree.
But don't go into trading right off the bat thinking you're going to again, we've already said that thing, you're going to make money. Keep saving up. Make sure you're not using money that you need to live off of.
I agree.
Yeah.
And I mean, Grant Cardone he's not a day trader, but he has a quote about this, that everything takes 10 times longer than you think it does. And he's got a book. It's his whole lifestyle, the 10X lifestyle, because everything does take 10 times longer than you expect. It doesn't matter what you're doing. You could start a business or anything like that, and odds are you're not going to make money right away. It's going to take 10 times longer on average and 10 times more effort to actually get there. And so if you're day trading and you just give up after the first 2 months, 6 months, year even, that doesn't mean trading wasn't for you. It just simply means you didn't give it enough time. Maybe your risk was completely out of control.
Risk reward is important.
Yeah, just completely out of control. And you took yourself out of the game too early. And you just got to, slow and steady wins the race. And those slow gains add up over time, and before you know it, when you start trading with a big account and you have that confidence, then you can start making those big gains.
Yeah.
But those people you see on Twitter, they're everywhere. They're making like $1,000, $4,000, $10,000 a day.
Good for them.
Yeah, great for them. But it took them. You don't understand. It probably took them 4 or 5 years to get there. It's not like they just came out first day trading and they made that $10,000.
Yeah, and that's very rarely is that going to happen.
Yeah, use it as inspiration. If anything, you shouldn't try to copy them. You're not going to get there, especially if you have a $2,000, $5,000 account. You're not going to be making $10,000 in a day. That's just completely unrealistic to expect that. Especially if you're new, it's just not going to happen. In 3-4 years, you can make that much money, and I mean that's a ton of money. Okay. I mean, you break it down. $400 every trading day is $100,000 a year, right? You multiply that by 10, $4,000 a day is $1 million a year.
Yeah.
I could live comfortably on $1 million.
Oh, really?
Yeah.
Oh, okay. All right. Well, that's good to know. I don't know if I can do it. It doesn't seem like enough money to me.
No, I'm just kidding. But a couple $100 a day on top of the freedom that trading gives you. If you're pulling in $300-$400 a day trading, that $100K a year. This is just on average. I'm not saying every day you gotta be green, but on average, if you make $400 a day, that's $100K a year, and you're free. You
could realistically do that with like $60K a year.
That's what I'm saying.
$200 a day. It doesn't seem that hard thinking about it, and that's I think the most appealing part about it, though.
Yeah, because the gains could be huge. No one shares the losses, first of all, too.
Yeah, that's true.
So, first of all, trading is completely, all focused on the gains, and everyone wants those big gains, but no one truly shows those big losses.
And even, I don't know, sometimes I think the people that do show their losses, do you still know if they're showing the full extent of their losses?
That's completely true, too.
It's tough. You never know, but
I mean, if you see someone who's truly showing their losses, or like every day they're posting their P&L consistently, whether they make 100, 1,000, or they lose $1,000, no matter what it is. I mean, those are the people you want to follow.
I think Matt Az is a great example of that.
Matt Az is a great example.
Every day, the day he lost like 60 grand.
Exactly, and he showed it, and he's had days he's made 70 grand plus. He's only averaging, I say.
In comparison to what he used to be doing.
But he's just, right now he's got this no blow up challenge he's got going on, and he's making like $1,000 a day,
which is awesome. Which is awesome. It just shows how consistent you can
that's
be
over $200K a year. Yeah, that's big money.
Absolutely. Yeah,
that's where I want to be, man.
Yeah, I think it's where we all want to be.
All right, you want to wrap this up?
Yeah. So basically, again, if you didn't catch kind of the point of this podcast, we were all over talking about a lot of different things. So hopefully you found them interesting. Our goal is to be interviewing traders who, hopefully, between newbies who are brand new at this, to intermediate level traders who've been doing this for a year, 2, maybe 3 years, maybe longer, who are just kind of struggling to find consistency.
Yeah, I mean, obviously, I'd love to have even some of the successful ones on there to know what's possible. But
I was talking about our audience, for people who are of this. No. And so we want to be interviewing people who are, kind of just starting to find their consistency, regardless of how long they've been doing it for. Mm-hmm. And who, ideally, those who are just getting beyond the PDT.
Nice plug there. No, but yeah, we want to, share our journeys as we make it beyond the PDT, as we all, we both hope we get there. Obviously this year.
Hard work.
Even if it happens next year or the year after,
Whenever it happens.
Whenever it happens, it'll come when it comes. But we just want to, be part of a huge community, a transparent trading community of just people helping each other out.
Yeah.
And, hopefully all together, we can get beyond the PDT. That's the goal.
Yeah. So, to wrap this up, thank you guys very much for listening to our first episode. Our second episode is hopefully going to be an interview with someone you don't know about, and
someone, because there's a ton of successful traders out there who they're not on Twitter. Yeah, they don't want to be. They're living their lives, and they're just casually making a couple grand a day, a couple $100 a day, and then just doing them.
Yeah, and so we'd love to bring you their stories, and so you can kind of hear and listen to what they did to get beyond the PDT. So, thank you guys very much, and we'll catch you on the next episode.